Good afternoon, everyone. We'll just wait for a few seconds to come in this exciting, informative webinar that we have set for you today. This is a good opportunity for you to introduce yourself. What type of business do you have? What industry? Where are you located? Here in Miami-Dade, or throughout the entire state, or throughout the entire country? Like that will be able to provide you those necessary tools for you to scale your business, grow your business, but at the same time introduce you with these key resources to help your small business for this year. Some general housekeeping items. This is a recorded webinar. All participants will be receiving today's presentation along with the recording as well. And if you have any questions throughout today's presentation, I strongly encourage you to put it in the Q&A so that my colleagues and myself will be more than happy to answer those questions for you. So we have two great partners and also our organization from Operation Hope and Carlo Perez that would definitely talk to you about some initiatives, programs that they have available. Along we have Brian Van Hook, Regional Director of the Florida SBDC at FIU, that will be presenting today's topic. So without further ado, allow me to introduce Brian and he'll get the ball rolling.
Thank you, Jesus, and thank you to everybody for joining the webinar. Our center, we always say if you're doing something, you're not doing something else. So thank you for giving us an hour on your Friday to just like review this very important topic, whether you're starting a business or whether you're growing an existing business. As Jesus mentioned, I have like one of the best jobs. I'm the Regional Director of the Small Business Development Center here at FIU. And if you're here for small business grants and financing, you're in the right place. So we'll go ahead and get started, but please put who you are in the chat, what's your business, and then also feel free to put in the Q&A in terms of any questions that you might have for Carlo and I as we get towards the end. And we'll save some time at the end to answer your questions. So without further ado, let's get into it. Just quick background on me. As I mentioned, we're old friends now. I'm the Regional Director of the Florida Small Business Development Center at FIU. I've been with the center since we started in 2014. The reason why I'm kind of leading the presentation today is in addition to working for the SBDC for 12 years, prior to that, I worked for 10 years in Washington, D.C., both at the U.S. Department of Commerce and at the United States Senate on the Senate Small Business Committee, and for a senator from Louisiana. You'll see there, that's one of my action photos that I show my kids I was once cool. We got to fly in the military helicopter when they had the BP oil spill. So we were assisting businesses that were impacted by the oil spill and finding out how we could help them from the federal and congressional side. And I had to be the guy because I had to meet with bankers right after that meeting. So I had to wear like the sport coat out on the meeting with the businesses. But actually a lot of the agencies and programs that I worked on were related to small business financing, small business grants. So I ended up picking up a lot of expertise in terms of small business programs, small business financing, as we said, in the programs that have grants. Overall, I worked on small business and economic development issues for about 20 years, and just happy to provide that experience to you to help you with your business. Just real quick about Florida SBDC at FIU. Shout out to our really great team. We have consultants all the way from Key West in the Florida Keys, all the way up to North Miami-Dade. We have overall 19 consultants. They're all business specialists in different areas. And the best part is we get federal funding from the Small Business Administration, from the Department of Defense on the APEX program that we're going to talk about. But also we get funding from the state of Florida and other sources. We have to kind of show what we do. So we have to help you in terms of starting your business, growing your business, getting key milestones and impacts for you. So this just shows you what we've been able to do from 2014 to 2025. We're really proud that last year we crossed the $500 million mark in terms of capital access for our clients. That's everything from mom and pop grants, micro loans, different awards for different competition programs, all the way up to like commercial loans, venture capital. So we're really proud in that respect, because that's everybody that we've been able to help, day after day, week after week. And so it's a real big milestone for us. What we do is we focus on one-on-one business consulting. So as I said, whether you're starting a new business, whether you have an existing business that you want to grow, we can help you in a lot of areas. Particular to today's topic is access to capital financial management. We can also get you marketing research, data to help you identify client leads. And then obviously we do trainings and workshops like the webinar that you guys are in here today. I mentioned the Department of Defense, Department of War. We also get funding from them for the Florida Apex Accelerator Program. That's similar to SBDC, but it's more focused on government contracting, especially on the Department of Defense side, the federal side. And so we're really proud that we have two great consultants under our team with the Apex program. This just shout out to our team. These are our business specialists in Miami-Dade County. So you'll see them. And then we also have two consultants that are based in the Florida Keys, so helping those really great businesses down in the Florida Keys. I'll put this up. This is our QR code if you'd like to meet with one of our consultants, maybe to talk about some of the different topics we're talking about today, or another area. I know they'll also put it in the chat as well. So I'll leave it up for 1 second just so in case you want to scan it. And then I'll turn it over to Carlo so he can talk about our partner at Operation Hope.
All right, all right. Thank you, Brian. I appreciate it. Thank you, and good morning to everybody, and thank you to Brian, Jesus, and all the great folks at the FIU SBDC for having me join you all today. So thank you very much. I appreciate it. So good morning, everybody. My name is Carlo Perez. I'm a financial well-being coach with Operation Hope. Operation Hope is a national nonprofit organization where our mission and vision is to empower our communities with better understanding when it comes to financial education and become and increase their awareness around financial literacy. So what I specifically do is I work with individuals and small business owners on credit, budgeting, financial planning, and overall financial readiness. Our goal is simple, as I mentioned, help people make smarter, stronger financial decisions so they're better positioned to grow or scale a business and eventually access capital when the time is right. I am a Miami-based coach. I am originally from the South Florida area. I'm actually FIU alumni from many decades ago. And I've worked in industry for over 25 years. So I bring a wealth of experience. I am a business owner myself where I've gone through the process of securing funding and negotiation and pretty much the whole process of starting up a business. So we function as an additional resource to you all. The programming and the framework of the SBDC is fantastic, and Operations Hope framework is pretty much the very in line with that. So my QR code is there. I'll drop my name and phone number in the chat for a little bit later. We provide different modalities of coaching. So what we do is our modality of coaching is based on the educate, coach, and connect model. So what we do is here at Operation Hope, we offer group workshops where we touch on an array of different topics, right? Capital readiness, how to start the business, how to grow the business. We provide you, for lack of a better term, free resources such as business templates, business health assessment workbooks, financial readiness plans, and then our role as coaches is to work with you one-on-one in helping you get your vision from the idea concept onto paper and then putting it into action. And then our third form of coaching is really more of a connection piece, and that's where, as we start helping you advance on your goals, we connect you with the necessary resources within the community, whether it be a lender, whether it be a community agency, or even another community partner like SBDC, because they have a full team of specialists that can then take they can then take where you are now and help you grow into the next phase. So that's a little bit about what we do at Operation Hope. I also host monthly workshops. So with the workshops, we cover also all the necessary topics: building strong credit, steps to start a business, and I provide them in English and in Spanish. Okay, so and these are no cost, no obligation. Just like today's webinar, they run 45 minutes to 60 minutes, and then what we do is once a quarter we have a quarterly cohort where it's a six session program, and then we graduate you at the end, and then we that better positions you to get started in your entrepreneurship journey. So in terms of one-on-one coaching, what does that look like? So just to give you all an idea, we provide personalized credit review and strategy. We help you with budgeting and financial planning. From there, we also go into credit building guidance, and two very important contexts within that is we help with income assessment and identifying better growth opportunities. And then at the end, the idea is to position you to get ready for access to capital and financial readiness. And through our portal, you also have access to complimentary courses and resources that will help you along the way. When it comes to access to capital resources, right? So we'll review funding options, application resources, we'll provide financial education, and as mentioned previously, we go ahead and connect you with our lending and our community partners as necessary. Just to kind of finish up a little bit on this section. So what we've been able to do at Operation Hope, alongside community partners like the FIU SBDC and other strategic alliances, on average, our clients see an average increase in credit score of almost 40 points, right? 39%. When it comes to savings, they see on average about $1,000 increase within the first 12 months of coaching services. And then what we do is we also have a focus on debt reduction. So our participants have been able to enjoy on average about a $1,900 reduction in debt. And that pretty much is it as an overview of what we do here at Operation Hope. And again, I'm just here as an additional resource. What the SBDC does is fantastic. I've been admiring them for many years, and I'm like I mentioned, I'm local. I'm from Miami. So I actually had a preliminary conversation with them many years ago when I first opened up my business. So, the information that you're going to get here today is fantastic. Brian is, his leadership is well admired. So take notes, ask questions, and definitely follow up with Brian and Jesus after the fact if you guys want to get more information. And that's just a little bit about me. I'll be here chiming in as necessary. Brian, thank you so much for allowing me to join you guys. And thank you, Jesus.
No, thank you, Carlo.
Jesus is
Yeah,
behind the scenes, but he's doing a fantastic job. Thank you, my friend.
Yeah, shout out to Jesus and also our student assistants for
And
their
our
help
student.
behind the scenes. So I definitely want to shout out Carlo, Operation Hope, and they're also partners with like a really great organization. We're partners with Santander Bank. So I want to shout them out, and definitely I know we put in some of Carlo's information. We'll send you this presentation afterwards as well if you want to get connected. So the topic of today is we're talking about small business grants and financing. So I did want to mention to you guys at least an example of one program. We, in addition to partnering with a number of community organizations, Florida SBDC at FIU also partners with Verizon and LISC on the Verizon Small Business Digital Ready program. This is a great program that's like an online platform that you can basically go on demand for free. You can access courses related to starting and growing businesses. You can connect with kind of virtual coaches there. They also have like networking events, like ways to connect. But actually I would say the learning and the platform and the courses is like the most important part. But it's kind of like if you eat your vegetables and you also do get some dessert, they also do have some incentive grants that they offer when you complete some different milestones on the platform. And as it happens, the new round for 2026 actually just opened. So the first part is going to be available from like this week through May 31st. But to be able to get the grant funding, you're actually going to want to log into the platform and actually start taking some courses. Um, so let me just talk to you real quick about the benefits of the platform. Like I said, it's self-paced courses. It's topics like finance, digital marketing. They have like expert-led workshops, so they'll have like themed things that come up where it's kind of like small working group sessions to like have larger Q&A sessions with experts. And then, like we said, they do offer periodically $10,000 grants. I'm here to tell you these grants are real grants. We've had basically one client that won the grant last year that we're going to mention. We also had two clients that won grants this year. So these are actually opportunities you can get. Basically to get the grant, you just have to complete courses on the platform, and then they have like a little button that's like apply. And the good thing about they changed the process for this year, we only have to apply once. Then if you apply once, then you're eligible for like future ones. Um, so, like we mentioned, these are some of the courses that are coming up related to the topic we're talking about today, where they have something on budgeting, something on understanding your numbers. They have one on forecasting your financial future. So these are things that are coming up like in the next couple of days or next week. So I would encourage you to check them out. It just gives you an example of the content that they have. And then, like I said, we've been really proud to have a number of our clients that have got grants under this program. So actually on the left is Marley Q, that was able to get it. She attended like our kickoff session in Doral when we did it. And then she was able to secure a grant last year. She's been a grant ambassador, not just for the center, but also for the Verizon program. And then we also have one of our clients, Reliance Contractors, that also got the grant. So I'm putting it out. It's kind of public out there. They put it out on their social media about getting the grant. So when we had another client that also received a grant. So just want to encourage you guys for that. So I talked all about the grant. This is the QR code. So if you want to sign up, basically this is the QR code to get on the platform. Would encourage you to get it. You just have to have a business, and then you can basically log into the platform and take some courses and kind of see for upcoming opportunities. So getting into the content for the program, now that we've talked about Operation Hope, we talked about SBDC, we talked about some particular grant opportunities that are out there. Let's talk about the presentation. We're going to talk about the different stages of your business, how financing comes in to help you start or grow the business. We're going to talk about like the small business capital continuum and kind of like the full scope of what you can access. We're going to also review particular organizations that you could go to here in Miami-Dade for different types of financing. I know we also have some links in terms of the keys as well. And then like Carlos said, he's going to jump in and help out and give you some expert opinion, both from his business experience, but also from his banking and financial side. So Carlos, feel free to jump in on any topics. So before we get into financing, it's really fundamental to understand like what is the why for your business. Different businesses are created in different ways. So there's different folks that are like more entrepreneurial, where they want to build and sell the business. They can have like multiple businesses. So they're basically like a serial entrepreneur. In a lot of these cases for those businesses, the growth of the business preempts profits. They basically want to grow the business really fast. They want to maybe set it up for a sale. In those cases, a lot of times you want to not maybe go the traditional banking route, because you might not want to have debt in terms of the business. You might seek friends and family. You might, bootstrap it. You might seek venture capital. So you might see different types of funding, and also your business might be structured different if you're looking to sell the business versus if you're looking more to like have it be like a business that you're going to do day to day. In that case, it's more of a lifestyle business where you're trying to build like a legacy for you and your family. You want to build generational wealth for your family. You want to have more reliable profits. You want to have stability. It's kind of something that it is your 9 to 5. In those cases, you might seek more traditional financing. So you might go for like a CDFI. You might go to like a small business loan from the SBA or commercial bank. So just want to reiterate for you guys, depending on what type of goal you have for the business, your goal is going to drive like your business strategy and also what type of financing that you seek. So just keep that in mind for some of these. Also, the stage of your business is determinant about what type of financing you're looking for. So if you're a pre-venture where you have an idea, but you haven't started the business yet, no employees, no sales. If you're a startup, that's basically less than 3 years. You're kind of more focused on growing the employment, growing the revenue, kind of getting your feet under you, building a foundation. And then you have obviously established businesses that are in business more than 3 years. You have those demonstrated proof of concept. You basically have revenue. You have employees. You have projects that you worked on, whether it's private or like on the government contracting side. And your focus is kind of like continuing that growth and kind of growing the team, growing the business. So those are kind of the three different stages of a business, and those also do factor in terms of the financing you're looking at.
If I could
One of these,
say,
yeah, jump in. Go ahead.
sorry, to echo Brian's point. So something that I see consistently is when we're considering starting up a business, and I have these conversations with the clients or the participants. uh, a lot of times when it comes to funding, we're trying to figure out what type of funding we're looking for. But it's, to Brian's point, it's fundamental what the plan is for the business. What I've seen in my experiences, clients will say, well, I want to start a business and this is my business and I want to work in it. And then as we start conversations, they mention, well, you know what, maybe I want to sell my business a couple years down the line. And that's where we sometimes have to pause and just, have honest self-reflection. What is the overall purpose of the business? Back to Brian's point, what's the why behind it? And it's really important to have a plan around the why, have that really defined. And with that said, it's okay if it changes down the line, but at least at point A, when we're starting it up, have the why really defined, because that's not only going to help your consultant, your coach, but it's also going to help whomever you approach for funding, right? To Brian's point, an SBA lender looks at a startup one way, where maybe a micro lender or an organization in the venture capital space, they'll look at it in a different way. So it's very
Mhm.
important to have that why defined. And then if you're going to bootstrap it, self-fund it, or bring in friends and family, it's important to be clear on that as well. It's very, very important to define the why and really have what I call, you have a business plan, but you want to have within the business plan, you want to have like phase one business plan, then move on to phase two. Phase one is, okay, what's the initial plan for this company? Do we want to keep it for 5 years and then sell it, or do we want to grow it? And I'm just echoing what Brian said. Thank you, Brian.
No, great points. Thanks for mentioning that. So I do want to lead off with like about small business grants. Basically, beware of scams or any kind of sales regarding small business grants. The federal government pretty much doesn't offer any more free money or free grants to individuals for personal or business needs. So anybody that's like trying to sell you that, I know that historically they had the guy with like the question marks on his jacket. Be wary of it, guys, because there are no more like grants from the federal government. Small business grants that are available are traditionally given by community foundations, local governments, nonprofits. We mentioned there are some private companies that also offer them as part of different programs or initiatives. So definitely be wary of it. Just be aware of that kind of at the outset. Yeah. Also, I was just going to mention that small business grants can be available on an annual basis, a one-time kind of one-off program. So those are the kind of things you want to look for. Is maybe there might be a program that you just missed the timing, but it's something that's offered every year. You can basically kind of game it out and look for when they do it. Always be aware though that while they're grants, you may have to meet certain criteria. You might have to do certain benchmarks to receive the funding. And then I would shout out, we talked about Santander Bank, we talked about Verizon. There are some like cohort-based programs that are focused on trainings where they offer grants upon completing the program or winning like a final pitch competition. So you definitely want to check your program announcements when you're applying, and you want to make sure that you're basically doing all the criteria that you need to be eligible. And definitely, like I would stress, focus on the education component first, and do a really good job and kind of learn what you can for your business, and then the grant will be kind of an added bonus or helping you execute in terms of what you learn from the program. Also, just some basic terms in terms of debt financing versus equity. Debt financing is when you're borrowing money that has to be repaid over time, usually with interest, and that financing is non-dilutive. Equity financing is when you raise money in exchange for a share of ownership in the business. Equity is dilutive financing. So it's kind of like as more folks come in, then basically it gets watered down a little bit. But that is something to factor in because some people kind of want to keep control over their business and they don't really want folks having a say in it. So in those cases, you might be more averse to equity financing versus just getting like debt financing in terms of a loan and things like that. So those are factors you want to consider as well when you're looking at different financing options. Just around loans, there are four different types of them. Obviously, like a term loan, a leasehold improvement, if you're making some improvements to like machinery or like real estate or like factories or buildings. There's real estate loans for like purchasing property, and then there's like a line of credit that's kind of working capital that you can get. And then obviously you have short-term debt versus long-term. Short-term can be like an overdraft, a letter of credit, a short-term loan, usually less than 1 year. Short-term financing can have higher interest rates and also might not help with your long-term capital investment needs that you have. And then long-term financing is basically like a loan or leasing that's usually more than a year. So for great examples like equipment, you can basically do like a long-term lease on that and then eventually buy it out. And then long-term financing kind of gives you that stability. But the total interest paid over time is usually higher because it's over a longer period of time that accrues. Anything on those kind of common terms, Carlo? Anything?
Yeah, no, definitely. So, and thank you, Brian. Yeah, no, definitely. To echo Brian's, all of Brian's points. So, to even back up a little bit, when it comes to just starting at grants, right? So, one of the common questions that I get in my cohorts and in with my roster of clients is, where can I find grants? So, it's really important. It's an age-old saying, and I can tell you from personal and professional experience, it's an age-old saying, but know your banking representative. Build a relationship with your banker, but don't stop there. Build a relationship with your business consultants, like the SBDC, like Brian and his team. If you have coaching services like what I do here at Operation Hope, build that relationship. When I say build a relationship, have a conversation. Don't be one and done, right? Bounce ideas off of us and what you're thinking. That's what we're here for. With that said, also leverage your professionals in your life. Your Everybody should have an accountant or a CPA, especially if you're thinking about starting up a business. I know that when I first the idea of starting a business popped into my head, the very first person that I spoke to outside of my house was my accountant, and I told them what my idea was. I told them what my plan was, and he gave me guidance. And this is someone who was in banking for over 20 years. We all need that type of guidance, or that second set of eyes, that different perspective. So with that said, build your pre-launch team, right? So I get sometimes the comment, well, I don't know where to start, or what do you mean build a team? Do I have to hire? No, you have your team right in front of you. It's just identifying them, right? So your banker, your accountant, your business consultant, your small business coach, build that team and have that conversation. That's number one. Number two is, you can lean and leverage us to Brian's point, for legitimate grant and funding sources, right? To echo the part about scams, right? Especially after the COVID years, there's just a lot of misinformation and scams when it comes to the grants and the grant process. You want to go with legitimate grant organizations. To Brian's point, I would say start with the banks. A lot of the banks are offering, as part of educational cohorts, the grant funding, but the main piece there is the educational piece. We all know what our product and our service is, and that's why we're wanting to start our own business. But we also need to learn behind the scenes what's the process to build that foundation. So that's what these cohorts are, like the Verizon grant, the Santander grant, and many and all the other grants that are out there. But when you go into a grant, understand that it's education first, and it's a pathway to the application process for the grant. And when it comes to the different forms of financing, Have a conversation with your business banker. If you don't have a business banker, walk into your neighborhood branch, ask to speak to the manager. Who's the business banker here? I have some questions, right? Again, if you're already working with the SBDC, reach out to your consultant and have that one-on-one. And if you're with coaching with me or with anyone else, again, have these conversations and start building your team. It's not a luxury, it's a necessity to have these professionals around you, because that's what we're here for, to provide you the accurate and correct information. So we'll point you in the right direction. Don't get information, off the internet. Come seek the professionals. Talk to Brian and his team. They do a fantastic job. They'll get you in front of the right sources. I just wanted to echo that because I see that a lot in my space, where clients will reach out and say, I want to apply for a grant, or I heard about this type of loan, but I don't know who to ask. I don't know where to go.
Yeah, and I would say in Miami, we have a great network as well. So a lot of the community partners also hear about grant opportunities or different things. So we have like a good network that we share a lot of those. So just thanks to Carlo for that background. Also, we talked about equity financing. That's basically raising money in exchange for shares in the business. It allows you to basically get funding without incurring debt or having to repay amounts. So the most common equity financing is like what did they say? The friends, family, and fools. So friends, family, and business acquaintances. But you need to be aware in terms of actually venture capital, where people are going to try to pitch to like VC or more angel investors, that probably less than 1% of companies seeking venture capital actually get funded. And then in terms of like small business financing, this is kind of like the little continuum that we set up, where basically it kind of goes from bootstrapping all the way to like venture capital. And we kind of set this up because it is a way for you to think like graphically about the type of financing you can get for your business. And would mention basically, obviously, bootstrapping, small business grants, mission-based lenders, SBA microloans or SBA loans, friends and family round, commercial loans, crowdfunding, peer-to-peer, angel investors, and then venture capital and equity. So we're going to go through each of those individually just to give you some more background on it. But just would reiterate that small business financing can be like a road or a pathway. You can jump on or jump off. Like we talked about at the beginning, it depends on the stage of your business, what industry you're in, kind of what's the structure of the business, what do you need the capital for, and then other things like your credit history, small business finances, those type of things. So those are things that you need to factor in, depending on what type of financing you're going for. So let's go through the checklist. So bootstrapping that we talked about is kind of like where you're self-funding. It's basically where you're putting up your own money towards business expenses. Self-financing can be your savings account, your 401k, like a HELOC. It could be a lot of different things. The upside is that you retain control of the business, but you don't take on, but you're going to take on all the risks. So you need to, like Carlo mentioned, you need to talk with your accountant, your financial advisor, because you don't want to jeopardize your retirement plans if you're basically like taking out money now and basically it's going to hurt you down the road. Another option that's usually under bootstrapping is friends and family. You could basically reach out to folks that know you, that are familiar. You can make them familiar with the business concept and kind of bring them in and get some funding for them. This is careful because it's going to make for a very difficult Thanksgiving, family function, party, because you're mixing your business and your personal relationships. So you definitely want to be very by the book on it. You want to clarify all the risks to potential investors, settle on your fundraising strategy, document all the transactions. Some of the business owners that we work with that were able to get friends and family or institutional investors, they were able to basically just get like one round of investments from folks that they were familiar with, that they kind of met through education or business. But they were really, really good in terms of documenting. Like, you're giving me this is what you get, sending newsletters, sending them updates. So in that respect, you're basically like cultivating that investor, and you're able to basically circle back with them instead of trying to bring in additional investors for the business. So it actually is like really good. So can't really have to stress, communicate regularly after the initial investment, work up to more professional investors, but definitely keep in touch with the folks that invest in you, and document all those transactions to make sure that you're not getting any situations that might make things difficult. Small business grants, which we talked about. The best use of your time is to review those like national, state, and local organizations that provide funding to small businesses. Federal grants are generally more to like state and local governments and nonprofit organizations. So they don't have any more direct grants from the federal government to actual private businesses. When you're looking for grants, you want to identify those that you have the best chance of securing based on your industry, based on your business size, based on other characteristics. So, for example, Pepsi has some different programs that they offer, like on training and grants that are more geared towards food businesses. We talked about Santander's Cultivate Small Business Program. Verizon is more agnostic. You just need to have a business and then get on the platform. So they have like different programs that are looking for different types of businesses. So would really stress focus local. Those are local organizations that offer grants to start or grow businesses or base your business in a particular area. And if you're starting local, the first group to look for is like your county or your city's economic development department. They offer incentive grants or they offer like incentives to local businesses. So examples could be like a business improvement district, like I'm here in downtown Miami. We have the Miami Downtown Development Authority. They offer grants for facade improvements, for relocating. They offer other periodic grants. You might have a community redevelopment agency that's focused on a particular area of a city. We talked about downtown development places or main streets. And then those organizations have a variety of different ones, capital improvement, facade, other ones towards recruiting and retaining businesses. So you definitely want to be proactive in that respect. So kind of start from where you're located or where you're looking to locate because you can get some opportunities there. Also, there are statewide regional foundations. They usually target nonprofits in the community, but there are sometimes opportunities for small business financing. It's because they're usually like a conduit for larger philanthropic efforts in the community, either looking towards businesses and nonprofits. So like we said, check your eligibility, check application deadlines. Please note if you're in that targeted area. I did include the link up there from the Council on Foundations where they have like a community foundation locator. And we will give you some additional links at the end of the presentation as well. But some national organizations that offers like FedEx, National Association of Self-Employed, basically Barclays had some. Basically, don't forget about like those cohort-based programs as well, like we said, Santander, or like the type of programs like Verizon that are online. Next up is mission-based lenders. These are often called like community development financial institutions, CDFIs. They're focused on like providing economic development in underserved areas. They provide affordable financing, training, support, and these organizations are really good because it is like the on-ramp to financing a lot of times. So maybe you might not be able to be ready for like an SBA loan, a commercial loan, but you can work through a local CDFI. And they are able to do that because they get federal, they get state funding, they get private funding. So they're able to like mix up that and offer like different loans at good rates and also kind of like helping people that might not qualify for financing elsewhere. Like I said, they might be geographic based, underserved populations, and then like really focus on their kind of services is loan products and also technical assistance. So I did include the CDFI fund link in there that shows you like where you can look up local CDFIs. And then we do have some listings of local CDFIs here in Miami-Dade County or in South Florida at the end of the presentation. We want to talk about SBA loans. SBAs are basically small businesses that get loans from commercial lenders. They also have CDFIs on the microloan side. The SBA helping out, like reduce the risk for lenders, helps lower the down payments, helps get lower rates, and it gives some continued support for some of the loans. So you can actually go to the SBA's Lender Match website where you can kind of get connected with some local lenders. I would shout out like the SBA microloan program. Those are loans of up to $50,000. They also did open it up for like childcare centers. So it's small businesses and childcare centers as well. And that's for like working capital, inventory, furnitures and fixtures. You just can't pay existing debts or purchase real estate with the microloan program. So you can actually look up for like micro lenders in our area. And then we do have links at the end for like some individual organizations. And then in terms of kind of the SBA flagship programs, the 7A program is the primary loan program for small businesses. The 7A is actually the name of it. I know it sounds very bureaucratic, but it's because it's in Section 7A of the Small Business Act. So that's kind of how they designed the name of the program. It's very well known now by small businesses and also bankers. They did try to change the program a couple years ago, and it didn't really go that well, so they kind of just stuck to 7A. But it's basically loan guarantees to lenders to help them do financial assistance to small businesses. You can use it for acquiring, refinancing, short-term or long-term working capital, refinancing business debt, purchasing like machinery and equipment. You can basically do purchasing furniture. It's kind of like a Swiss Army knife. You can use it for a lot of different things. I would note though, for the 7A program, there was some recent SBA changes where you do have to be a citizen to access 7A financing. So it used to be where you could be a resident or on a visa, and you can basically qualify for that. So you do want to check your eligibility before applying for it. For 7A, the maximum amount is $5 million. Basically, they're going to look at how's your business income derived, what's your credit history, where you're operating. And then to be eligible, they have those different criteria up there. You can't be an ineligible business. Like I said, you also now have to be a citizen. And they do look for like the credit elsewhere test and also make sure that you're going to be able to repay the loan. Anything, Carlo, about 7A loans?
Yeah, so thank you, Brian. What I would just add on is to Brian's last point in terms of what they're going to look at. Uh, Obviously, the mission and vision behind your business and your business plan, but something that gets overlooked a lot, and then you see clients kind of backtracking to better position themselves is personal credit and personal financial readiness. Have a plan to get that part in order. Also, the SBA understands that you're coming to them or the lender understands you're coming to them for startup funds. But they do expect for personal finances to be structured and to be well organized as well. If you have the ability to put something aside, right, to show the lender, I need $50,000 to start up my business, but I've already saved 5,000. I've already set aside 5,000, right? That's 10% of what of the loan amount that they're asking. We want to show them that you're also contributing to the startup of your business. Other than that, no, perfect. Yeah, right on point. But don't overlook personal credit and personal finances. And just to finish up is if you don't have money set aside yet, at least start creating a plan. Create a plan because that just helps strengthen your loan application. And Brian, there's two questions. I don't know if you want to answer them now. One is from Tina.
We can cover in that. Yeah, we can cover in at the end.
Perfect.
At the end. For the 7A loans, I also want to mention if you didn't pay your student loans or you're kind of behind or something, that is something they're factor in because it is like a federal debt. So that's always a concern if you're going for SBA loans. And also if you had any issues or difficulty with COVID loans like the COVID EIDL, COVID PPP loans and grants, just be aware of that. They are going to look at those type of things if you're applying for SBA loans or any type of like federal financing. The 504 program, again, for Section 504 of the Small Business Act, is on long-term fixed rate financing for major fixed assets that promote business growth and job creation. So that is a little different. It doesn't go through like kind of like SBA lenders. It goes through like 504 community development companies, CDCs. They're certified and regulated by the SBA. 504s are more for like equipment for real estate. And the maximum for that is about $5.5 million. For 504, you have to be for profit. You have to have net worth less than 15 million. You have to have average net income of less than 5 million after like the taxes and the 2 years before your application. They want to make sure you're within the SBA size guidelines, that you have like good management team, that you have a good business plan. And they want, again, they want to look at, can you repay the loan? Like we said, you can purchase existing buildings or land, you can build a new facility, or you can get long-term machinery and equipment, but basically focused on that useful remaining life of 10 years. But 504s are really good, and we have a number of like really good CDCs in Florida that you can work with. And then would just stress to go to the CDC website that's on the SBA website, where they do list like what are the local CDCs that you can apply for. I think in Florida, there are kind of Florida based, there's at least 2 or 3, but around the country, there's additional ones as well. And then we talked a little bit about friends and family, but if you're seeking equity financing, you basically want to do like a pre-seed stage. That's family, friends, and business acquaintances. That could be anywhere from like $5,000 to like $100,000. There's no restrictions or there's no limits. But like we said, you should basically clearly define the risk to any of investors. You should settle on your fundraising strategy, and you should document all those transactions so that you can kind of say, like, I took this money for you. This is the shares that you get, and kind of track it. And like I said, keep regular updates for those investors, because those could be the folks that you go back if you're looking to grow your business or get additional financing. So you want to have like a shareholder or membership agreement that clearly spells out the relationship. Like I said, it's going to make for an awkward Thanksgiving if you took like Uncle John's money and then you didn't ever give him any updates on what you were doing with the business. So you want to basically be mindful of that. In terms of, we talked about SBA loans. Commercial loans are not guaranteed by the SBA, so there is an increased risk for lenders. So they're going to have shorter repayment plans. They're going to have higher interest rates. The upside is that commercial lenders have a variety of different financing tools and options, and you only have to meet their lender requirements. You don't have to meet SBA's as well. Which we would always recommend is to go where you already have like a personal or business banking relationship. Start there because they're already going to know you. You've already got deposits or accounts with them. And so you can basically start there and kind of see. And obviously, if your bank that you're banking with on the personal side or on the business side, if they're not willing to make you a loan, you can let your deposits do the talking. You can basically go talk to some other banks, because that might be a requirement. If another bank is going to make you a commercial loan, then they might want you to bring your deposits there. Angel investors are accredited individual investors who seek high returns associated with the risk level. And they really focus on like early stage pre-seed companies. Usually angel investors are through like clubs or associations. And what they'll look for are businesses that have growth potential, strong management teams, like a really good background in that industry or on that product or service. They want to have a good business plan, so that they can really assess like the idea that you have and what the company's value could be. They typically, like angels, will invest in ventures where they personally have like industry expertise, so they have like technology knowledge. So they really have like a better barometer in terms of that. So that is why certain angel investing groups, they will focus on particular industries or particular types of businesses, because they know those really well. So they have a better like indication. It is a misnomer that they're angel investors, so they think they're just going to give money to everybody. But they typically finance businesses in early stages, with like pre-revenue, before you have customers. But like we said, you need to have like that MVP. You need to have basically a business plan. The business will provide the angel investors with shares or the right to buy shares at a later time in exchange for that investment. But there's very few businesses that are looking for angel investors. They actually get them. So you want to manage your expectations, do your homework if you're deciding to go this route, and be prepared if you're not successful. But we'll have to like know what you're getting into before you do it. And then the upside again is that the angel investors can provide you with strategic financing at the right time for your growing business. They can also give you that unique business experience that can bolster your team. Think about like Shark Tank and kind of how that works. But these angel investors do want a high rate of return on that initial investment. And so they may want to be involved in the decision making on your business. So this could cause you to lose control of your business or take it in a different direction that you didn't want to go. So you do need to like balance the pros and cons in that respect. And angels can lead you to venture capital investors as you progress in your business development, but they will maintain their ownership interests. So you definitely want to manage the expectations on that. You kind of want to be aware of it because there are some pitfalls if you're not smart about it. Traditional venture capital is private equity financing that's by firms or funds that look for early stage and emerging companies. So they look for high growth potential, demonstrated high growth. That could be number of employees, annual revenue, innovative products or services. I know we're about to come up on like Emerge and like Startup Week and a lot of other things. So definitely that's kind of be like front of mind as we have some of those conferences coming up. Businesses that are seeking equity financing often cannot get funded from more traditional sources, such as banks. So I really did kind of stress that at the beginning, that if you do want to go the venture capital route, you might not necessarily want to go in terms of SBA loans or CDFIs or commercial loans. And if you do get that equity financing, it might like prevent you from the loan because you might have to get any personal guarantees or ownership requirements. So you want to be mindful of that. And again, like you get that investment funding, they get shares of the company, and then they might play an active role in what you're working on. You don't need to repay it or put up collateral, but they will own a stake of your business and they may make controlling decisions. And then companies that seek VC funds to commercialize products or scale, or they want to get connected with those seasoned entrepreneurs. So they do have like a high rate of return because they want to make up for all those businesses that they invested in that were not successful. So they need the ones that hit to make up for those. I would also just shout out SBA because they do have the Small Business Investment Company program. It's about 300 nationwide. Those are basically SBA venture capital organizations. They leverage funds guaranteed by the SBA, and they invest in small businesses in particular sectors and industries. They can provide financing anywhere between 250,000 to 10 million, and the interest rates run between 9% and 16%. And they do get investment in the company. Investments can range from 100,000 to like 5 million. SBICs are more on the mature, like established, profitable businesses that have like the cash flow to pay interest. But each SBIC has their own like profile that they're looking for in terms of geography, industries, different types of financing. A lot of the examples that SBA touts about some of their successes, those were actually SBIC funded companies. So like Apple, Outback Steakhouse, Intel, FedEx, Costco, AOL. Those were all companies. I know Chobani Yogurt also got some financing from SBA and SBICs when they were starting up. To qualify, you basically have to be 51% employees and assets in the US, qualify as a small business, and be in one of those approved industries. And then before we wrap up and get to your questions, I do want to just highlight for you guys, we're going to give you guys these links of local and national organizations that do offer financing. So you can look at these on your own time. But like, for example, local grants, mom and pop grants through the county commissioners. You do have like the CRAs in Miami-Dade County. You do have like the Wynwood Business Improvement District. Foundations, I did include some of them like the Key Biscayne Community Foundation, the Miami Foundation. I did put up there some of the national grants like U.S. Chamber, the FedEx grant, a couple other ones. We talked about mission-based lenders. These are like CDFIs. So this includes some of the ones that are local. We talked about SBA Lender Match. This is crowdfunding kind of peer-to-peer. We talked about angel investors in BC. So I did include some of those links up here. We also talked about SBICs. So Lafayette Square, I know, is kind of one of the big SBICs in Miami. They also have an office in Washington, D.C. So that is one of the more recent ones that came in kind of a couple of years ago. And then happy to turn it to you guys' questions for that. But I would say definitely shout out to our social media handles. That's our website. That's our Instagram. That's our LinkedIn. And then as Jesus mentioned, we will post this up on YouTube. So with that, let's get into the questions. Okay. So Jesus, did you want to read off the questions? You want us to read them?
Yes, so I have one. Um, it was, let me just right here. It was a lot of questions, so I was answering almost all of them. Um,
There you go. You're showing off
it's
today.
okay. So pretty much, let's see. In regards of I have one right here. I'm in the automotive repair industry, woman and minority owned. Do you know where I could search for industry specific funds?
In terms of automotive for those would fall under
Yeah.
some of those traditional financing. So that it depends on the stage of the business. So we would say it depends on if you're like a startup business, if you're an established business, for that, and also would depend on some of those factors for your business in terms of your management experience, basically your industry experience, those type of things. Thanks. But I'll ask Carlos if he has anything on that. Automotive, industrial.
Um, yeah, no, nothing specific in that regard to that particular space, automotive. But I think the person also mentioned female minority owned, right?
Mm-hmm. Yeah.
So yeah, so in that regard, there might be some small lending or some small grant opportunities that I can come across. And same, I don't have a problem with sharing that. I'm more than enthusiastic about it. If that person wants to shoot me an email, I can point them in the right direction. And
Yeah.
and and in that
I
regard,
would
it's
mention,
more about it'd be more about a minority owned format, not specifically
yeah.
because it's in the automotive.
Yeah, and I would mention for that women and minority owned, you would want to look at like the CDFIs, because I know that a lot of those do focus on a lot of those types of businesses, especially like in particular geographic areas. So that might be an option as well.
I'll tell you a big one that I've come across is Walmart. And
Mhm.
they also like Verizon, they're not industry specific, they're more ownership specific. So
Mhm.
Walmart sometimes has some options there.
That's awesome. And then I did see somebody talking about what about notaries, loan signing agents? Um,
That's more of a more like consultative based business.
mhm.
Again, depending on ownership, might be some opportunity in the grant space regarding because of the actual owner's background. But
Mhm.
I would say for that, tr for notary type service, traditional small business lending.
Mhm.
That's usually a good
Yeah.
option.
And then I do say that they talked about you need to be certified to qualify for those loans. But we did mention for you, you'll be able to look at it on your own time. Some of the loans, they do have particular criteria, different things that they're looking for. And definitely if you're going through like a commercial lender, you would need to qualify for their particular bank requirements. So you would want to look up like the different types of financing and what are the requirements for that. Um, and yeah, we for the question we had about does he have slides, we did include his slides in the presentation, so you will get those afterwards. And then I do see that they were talking about Miami Beach small businesses. Miami Beach has a great economic development group, so you can reach out to them and see if there is any opportunities. Just check the city's website, and also would mention they do have a CRA that's also in Miami Beach. So you might be based on where your business is located, you might be able to qualify for some opportunities there. They did talk about art-based businesses. There are just some different foundations. I do know, like for example, the Miami Downtown Development Authority has offered some different grants and programs geared towards like art-related businesses, art, kind of hospitality, those type of things. And then I see the last question looks like it is focused on how can a business apply for the Small Business Credit Initiative? That is a program that's under the state of Florida. It's actually under the U.S. Treasury. So SSBCI, and the program is still open. It usually does use lenders that are based in Florida. So you would just want to go to the website and then connect with one of the local lenders. I know in the past, Florida First Capital Finance Corporation that we listed, they had been one of the SSBCI lenders. So you can just look up and kind of do that. And you could start follow up with like Carlo with SBDC if you have any questions about that one.
if you want to also self-search, in both my professional and personal experience, I've also come across actually, believe it or not, LinkedIn. And if you configure your LinkedIn specific for that, that's also a great resource by just simply following the FIU BDC, right? So you follow the FIU BDC or uh, any of your local lenders, they'll start. You'll see their collaborations with these other organizations and these other resources, and then from there they'll start. Not that they'll start, but they'll mention these grants or they'll mention these type of loans that you just click on and get that information. And if you configure your LinkedIn kind of as a search engine for you, I think that's a great resource also, just to have an
Yeah.
idea of what's out there.
That's a great idea. And like, for example, with the Verizon grant, when it opened, we sent out an e-blast to our clients. We're posting on social media. So I think that that's a great point that you made, Carlo. So
Thank
I
you.
know we're like 2 minutes over time, so we do want to be sensitive to you guys' time. So is there anything to close us out?
Yes, all everyone that was here attending today's webinar will be receiving the recording and the presentation, and then
Mhm.
I have my everyone will be receiving my email. So if there's any way I can assist you with your business needs, if you're located here in Miami-Dade, Monroe County, state of Florida, or nationally, I am more than happy to connect you with your local SBDC along with Carlos' information. So like that, any
Mhm.
questions, concerns, we're family. I'll be more than happy
Absolutely.
to assist you in that regard. So I want to
Yeah.
thank you all for attending today's webinar, and I'll be looking forward to seeing you at our future events and have a wonderful day. And yes, if you're in Georgia, I'll provide you information for your local SPDC as well. So thank you everyone and have a wonderful weekend. Take care.
Thank
Yeah.
you,
Thanks to you
everybody.
guys. Take care,
Thank you
guys.
for my students from last night that showed up. Thank you. Thank you.
Mhm.
Yeah,
Yeah,
that's
you get
probably
extra credit.
some of my students from last night. We're all over. I had a student here. I saw her in the chat. She's from California. I think the gentleman that reached out in Georgia, we're helping him, and he's out in Georgia.
Nice. That's synergy.
Yeah,
So
yeah,
cool. Well,
no,
everybody
definitely.
have a great weekend. Take care.